Hey everybody, how you doing? It's John and Forrest here with Abode Real Estate Group, back for another one of your monthly market updates.
Yeah, welcome back, guys. So you've probably been seeing in the news and everything that the real estate market's been a little bit slow. The start of the spring has been pretty slow.
Doesn't feel like spring either, so
That doesn't help
maybe
either,
we're
yeah.
waiting for real spring for the market to pick up a bit. But
Yeah, it's kind of a weird one. I mean, I think we touched on it last video where I think it was pretty clear that the whole trade war tariff situation had kind of moved a lot of buyers to the sidelines. We noticed it on some listings where, first weekend you get a bunch of traffic and it kind of just falls off a cliff, and then it's very slow and steady, maybe 1-2 showings a week, if that. On a lot of properties that were busy early in the year, I think increased inventory is a thing as well. We've got pretty high inventory. I would say we're probably at a record high for the last 5 years.
yeah, and there doesn't seem to be much urgency with any types of buyers out there. They're really exhausting all of the inventory within their range of what they're looking for, and sometimes range of what they're not looking for. But yeah, people are definitely seem to be taking their time a bit more and on the sidelines a little bit.
Yeah, so I think the general consensus is that the tariffs or the threat of tariffs and the constant moving of the goalposts related to tariffs from Trump have basically created a lot of unease. And obviously there's talk of recessions and whatever else. I think for a lot of people that we deal with, just talking to people and what their view is and stuff like that, everyday people looking to make a move, buying, selling, whatever, a lot of them are just like, well, we're just going to see what happens.
Yeah.
Because we want to make this move happen this spring. Whether we do it in February, March, April, May, it doesn't really matter. We just want to be settled there at some point this summer. So our personal feeling on it is probably that we're going to see a bit of a lull. We've got a bit of a lull right now. Post spring break, going into April, we think things are going to pick up.
Yeah,
because there's a lot of pent up demand. People are going to want to move. Right?
Yeah, there's pent up demand, and I think it's going to pick up from both sides. I think we'll see a lot more inventory hit the market, which at the same time will kind of keep things more balanced. But I do think a lot of the buyers will kind of be coming back. I think with having Trump in office in the States, he's also just so unpredictable that for your average person who maybe doesn't follow much of the news or much of the economic forums and stuff like that, they don't really know too much about tariffs, but all everybody hears about is tariffs and how horrible it is and it's going to crash our economy. So for your average person that's not really fine-tuned with it or paying attention, it can be kind of scary. So everyone's just kind of like, well, I don't know what's happening.
Yeah.
Like, I'm just going to kind of wait and see what's going on.
Like you said, no urgency. Let's just give it a month or two, see what happens.
See what happens after spring break.
Yeah.
And then the people that we're seeing out there fairly active in the market it really seems to be necessity moves. Like people coming back for second showings, being like, well, I have to be in this school district. I got to get this sorted out in the next few months. And people are kind of looking at this opportunity where there's these inflated levels of inventory to kind of be like, oh, maybe we can get a bit of a deal.
Absolutely.
Which we're seeing some deals out there. So
yeah, it's almost like the boogeyman has shifted from rates to Trump, quite rightly so. Rates 4%-ish, low fours right now. Good rates out there. Fixed and variable around the same. You're looking at anything from high threes to kind of mid fours right now. So the rates are pretty reasonable, and obviously with houses with suites, you can now buy them up to 1.5 million. It's pretty easy going compared to the last couple of years, rates wise.
Yeah,
there's a lot of choice out there. Like if you're just a buyer and you've got nothing to sell, like this is the time. You've got the most choice. You're gonna have more choice coming as well. You've got lowest rates in 2.5 years. You've got like no one else wanting to jump in, so it's kind of like you've kind of got your cake and you're going to be able to eat it as well. So
I'm also starting to see, like in certain buildings that I've been looking at lately, mostly on the condo market, is that you're seeing like usually when you're tracking solds or trying to evaluate a listing, you're looking at all the data and you're seeing like, okay, like this is the range of what this style of unit's been selling at, and all of a sudden you're starting to see things priced incredibly sharp given the most recent comparable sales. So I think while the buyers are really taking their time, there's lots of sellers that just kind of want to get out of what they're in and into something else. So they're seeing the kind of like robust detached market where there's a lot of listings right now. There's some really good deals out there, and they're like, well, I'm okay to take a $50,000 hit off of market value on my condo if I can go get this house for $100,000 less than it should be worth.
100%. And don't forget, a lot of these people maybe thought about doing this move last summer when rates were 5.2%, and now they're 4.2. So they're going, well, yeah, okay, maybe I'll take $50,000 less than I wanted to, but hey, like that's basically awash with the new rate saving I've got right now. I can lock in a 5-year at 4%. So it's kind of like, it kind of washes out about the same. So I think we're just in a bit of a holding pattern with this whole uncertainty south of the border. Our hope and our gut feeling is that eventually people will just be like, okay, show must go on, like it always is with the Vancouver market. There was always these shock phases. So we'll report back next month, and hopefully that does materialize.
Yeah, it'll be interesting to see what like the political landscape is over the next 6 months as well. With we've got the new prime minister in, and it'll be kind of interesting to see how the housing market becomes a hot button for the political landscape, as it always seems to do. So
there was a very interesting point this week. So I don't know if anyone watching this is familiar with Bob Rennie. Bob Rennie runs a brokerage called Rennie.
Condo King.
He's literally called the Condo King. So Rennie are a brokerage. So realtors work for Rennie, and just like we work for Roller Page. But they also do a lot of pre-sale marketing, and they're probably the largest pre-sale marketing firm in the Lower Mainland, if not they must be the largest, right?
Easily the most well-known and most
tenured as well.
Tenured,
right?
yes, that's good.
Yeah, so Bob Rennie is the head of this company, right? And he came out on some kind of forum or seminar during this week saying that he's kind of buddies with Mark Carney. He's trying to create a program whereby there'll be because pre-sales, don't forget, are like none. Right, pre-sales are just about the worst they've ever been in about 30 years right now. No one's buying pre-sales. They're having a bit of a problem. They can't pre-sell enough. They can't launch projects. So his whole thing is he's talking to Mark Carney and trying to get some kind of program to bypass the foreign buyers tax, which is now 20%. Actually, there's a ban right now as well, federal ban. But his whole thing is he wants to be able to market and sell towers, for example, in Vancouver, to offshore investors with a covenant on title that would basically mean that it has to stay as a rental property for 25 years. So you have to ask yourself, why is he doing this? He's been very vocal about BC in particular, but also Canada not being open for business. We're very, heavy tax, low motivation for people to come and invest here, all this kind of thing. This has been the recent kind of like transition recently. And the whole thing is that they're obviously struggling to sell product. How can we sell more product? Whereas all the investors gone, the investors counted for usually about half to 2/3 of sales in pre-sale condos. So this program is an idea of getting more product into the rental pool, but also being able to launch buildings and actually get them sold so they can actually break ground and build them. The reality is right now, a lot of these projects will not sell enough within the 18-month time frame to be able to
obtain their financing,
actually get a building permit. Or get financing. So it's kind of a bit of a wild card, like talking about bringing foreign investment back into British Columbia, but I don't know how I feel about it, to be honest, but I feel like we do need to have some kind of stimulus, preferably local investment would be better. We do need to have some kind of stimulus to get product off the ground, because if we're not selling stuff now, we can't build it, and therefore 5 years down the line, we're going to have a severe shortage. So that'll be interesting to see how that plays out.
I mean, and even if they did something wonky where they like the certain amount of units allocated to overseas buyers were sold at like a premium, which in turn was able to kind of discount for like local residents and stuff like that, it could be great. But then you run into the dilemma is like who are these overseas people parking money?
Managing them?
Who's managing it? Like what kind of money is it? Where is it coming from?
Well, it's also if you were somewhere else in the world and you saw this program, would you really want to buy into that? Like I don't know. I mean,
it's kind of strange. It'll be interesting to see
so macro, right?
how it plays out. And with Bob Rennie being pretty in with Carney there,
it could be a non-starter.
Who knows?
But it's interesting. Davey, I think in the last week or two, I read an article where he was kind of basically saying like, okay, actually, maybe we do need to actually look at where we can get people to start buying investment properties again. Because don't forget, the last 5 years especially, the governments of all levels have been completely shunning investors and basically with rent control.
Yeah, they're making it really hard.
Making it really hard for whole rental properties, right? So it's kind of now they're like, oh wow, we don't actually have enough here, and we've got a problem here. We can't even sell product to build product. So
I think they're also starting to realize that the investors who are buying units and doing these small scale developments are actually contributing massively to the local government, and they're kind of missing the money, which is what it usually boils down to.
I guess when it's abundant, like the investments were abundant back in the COVID years and previous, it's kind of like it sounds bad because they're buying all the units that the first-time home buyers could buy and everything, but it's kind of like a necessary evil to create housing supply. But the government simply does not have enough housing to rent out, or they can't incentivize developers enough to build enough rental housing.
Well, especially with all the changes to the zoning and all the lots becoming, everything's like not everything, but fourplexes almost everywhere.
Yeah.
You know, lots of local municipalities are really pushing the development envelope. But when it comes down to it, if you don't have local, smaller scale developers that want to build sixplexes or triplex, if you don't have those guys there that are willing to put the money and the time into doing this because it's just not profitable enough for them, then how are we going to have a housing supply?
Exactly. And the other thing, with all the contributions that the cities are asking of them, all levels of government, all three levels of government are asking for contributions per unit, per development, whatever it is, hundreds of thousands of dollars, if not millions, of costs. There's basically no profit margin that looks appealing to any developer right now. So development's basically dead. So I think the government's slowly starting to realize now, on three levels of government, starting to realize we actually need to work something out here, because if this carries on, this is going to be a huge problem 5-10 years down the line. So it'll be interesting to see how that plays out.
It's going to be a huge problem now, but it'll be interesting
it's going to be a lot
see
worse.
how
The longer it goes on,
it's over time.
Yeah, because don't forget, we've got lots of completions happening now from units that were sold 2020, 2021, 2022. What's it going to be like 3 or 5 years down the line? I mean, there's almost nothing going to be completing. It's going to be a drought. So it's going to be interesting to see how that plays out. But in terms of the pre-sale market is definitely having issues right now. I would say all the woes are pretty much in the luxury and pre-sale market, or combination of the two. Resale market, pretty balanced.
Yeah.
Prices
a
don't
little
seem
slower
to
than
be
normal,
changing.
as we said, but I think things are kind of going to pick up a little bit here. So
It's hoping. So
yeah,
we'll report back next month, and hopefully we got some good news. And if you guys have any questions in the meantime, just reach out as always. Thanks so much.
thanks again for watching.
Bye.
Bye.